Hey, good morning, guys. Sorry I'm a little late. I had some technical issues here. Let me know if you can hear me okay. Hey, Greg, good morning.
Morning, Dave.
Hey, Dan, how's it going?
Doing good.
Awesome. Cherry, nice to see you. Greg, good to hear. Okay, you can hear it. Good. JD, good morning. Mike, Eucharist, good morning. Let me share my screen. Just put it in the chat box when you can hear it, or when you can see it, rather. Good morning, Pete. You guys can see the screen okay? Greg must have a really fast internet connection. He's always the first one to see it. Morning, JR. All right, good. Dan, you can see it okay?
You bet.
All right, good. Let me just put this over to the side here. Hope everybody's doing well. Interesting day today. Getting a little bit of a sell-off here. The YM's down 160 points. NASDAQ futures sold off pretty heavily right at the open there. Good stuff. Went long the spread this morning. I just wanted to show you guys something, and this really bugs me. I'm up about $900. I was up 1,000 there for a while, just on one contract. I did the exact same trades in C2, but it only shows I'm up $249 for the day. So the issue for me is that they lag so badly. They still try to match them with their existing network of brokers, and I think the fills are just really bad because we're going in at the market, and their fills are much worse than TOS. In any case, did you do well this morning, Dan? It was pretty easy, right? The up move
I
curve.
also took that the nice long.
Yeah. Today was pretty
A little
easy.
bit on the ESRTY as well.
Oh, did you? Yeah.
So I double dipped this morning.
So on RTY, what'd you do? I haven't even looked at it yet.
Just a few hundred, but everything helps.
Absolutely good. Excellent. So, all right, I'm going to open it up for questions. Then I got a couple of news items for you guys that are kind of interesting. But let me take any questions you guys have first, and this is your hour. So go ahead and ask away. Trying my short long YM spread. No, today was long. Today was only long trades.
So meaning long YM, short NQ.
Yes, so we're long the YM. Long the spread is long YM and short NQ. That's right. Yep. The strength. Yeah, the strength was really well. I mean, right now the strength on the NQ is like diving. It's -7, but it was stronger. I know what you mean. It was positive actually, while the strength on the YM was negative. But now you're starting to see it. I think what happened is that the data was extremely delayed. TOS froze up this morning, and the data on the NQ and the YM were really delayed.
I saw the same.
Yeah. When you get a lot of volatility, that's what's going to happen. Now you can see it's like diving. We're -7 on the strength on the NQ. -12 on the SD, 13 now. So it's really, I think that's the issue there. Yep. Yeah, that's exactly right. SD and ST were negative on the YM. and the Nasdaq was really kind of positive there for a while, but it's a delay in the data. Any other questions? All right, let's get into some news then. Number one is that JD continues to create some really interesting TOS scripts. The first thing he did was come out with a bell curve oscillator, which matches the bell curve, and you can set it on different time frames. I put it on the 1 hour because it seems to be not quite as volatile as lower time frames. I think I like the 1 hour. He also came up with the binary trend. So on the spreadsheet, this binary trend here is now showing up in it. He put it into a script, and but he's got lines in here. And what I did was I changed the lines a little bit because the two that I want to follow are the really shorter term ones, which is this one, and then a little bit of a kind of the midterm or the longer term one here. And he also came out with the 5th column level. So what he did was take this column in the spreadsheet and create a script also that measures the change, the spread between the Dow and the NDX over a 5-day period, which is exactly what this column represents, and he put that in here. So it's kind of nice to see. And it's also interesting to see when we get to like a 2.5% on a daily basis. I've got it on a 1 hour right now, and so this is the cumulative over a 5-hour chart of the spread, and it's pretty helpful. I think it's pretty cool. I'm going to give you guys. JD has agreed to share it with the community. So I'm going to type in the download link that you guys can get those at. All 3 of those scripts are in this zip file. And you can get those right there. So thanks again, JD, for doing that. JD sent me, he's a private client now, and he sent me his first video. Dan, I got to show you this. It's pretty good. He did a very nice job of analyzing the spread before the open, and he came out with a profit on his very first day.
Very nice.
Yeah. Pete says thanks. Greg says thank you very much, JD. Charlie says thank you, JD. Yeah. That's very, very cool. I think JD's going to take a break, though, from developing scripts to concentrate on his trading. Steve says thanks.
I did see, I think it was Greg that just had a question scroll up, and yeah, typically move into that 5-minute is looking for exits versus entries.
Yeah, exactly. So the scripts, I wouldn't use the scripts on the 5-minute, but I definitely want to see the 5-minute chart to kind of determine entries and exits. Absolutely. But I would not use the 5-minute oscillator. I'm really looking at, I really want to look at the 4-hour oscillator in order to determine when to get out of the position. So what I'm going to be doing is looking at this number on the ARB oscillator. When it gets like to 0.33, that means that we're about 70% of the average. Remember the average, the volatility arbitrage spread, if you take all of the actual spread over a long period of time, like a year or 2 years, it averages about to 0.50 per day. And so a 0.5%. So that's the average move. When you get around three, like we are right now, on the spread, that typically means that we're at 70% of the total profit possible on an average day. Now, today is not really an average day. Today, things are really moving. We're down 219 on the Dow and 95 points on the NASDAQ futures right now. So things are getting interesting. What do you think? I mean, we don't really talk about the general market that much, but what do you guys think about the general market? Do you think we're going to go into a bear market here? Do you think we're going to go to what are the catalysts here if we do go into a bear market, or do you think we're just gonna? This is just a normal correction, a little bit of a pullback before we go to all-time new highs. What do you guys think? P says, is JD any good at Excel formulas? I don't know, JD. That's your question for you, buddy. P says, I'm working on an RRG chart in Excel, but no good at math. Okay. Yeah, I wasn't very helpful with Pete. He sent that to me too, but I had no idea. I really don't. Greg says, I've been using the 4H ARB oscillator to get in and out, then changing to 5-minute to get out. Yeah, that's a good idea because you want to see the details. You want to dig down into the 5-minute chart to see. You want to get a good pump up before, if you're long, and to get out of the position. You want to see if it's stalling. You want to see if it's starting to reverse. You can't see that very well on a 4-hour chart, but on a 5-minute you can see it really, really well. Charlie, you think you're making a correction? 10 to 15% down. Wow. Pete got all 4 minis in now, but not enough separation. What do you mean, Pete, by separation? You mean the spread? Oh, with the RRGs? Okay. Points of data. So, I mean, here's one thing that, I don't know, Dan, have you noticed that interest rates on the 10-year are like, I mean, they've shot up pretty quickly. They're above 10%, or above 3%. I think they're like 3.18% on the 10-year. JD says, I can take a look if you want to send the data to me. Sure, I'll do that. Pete, why don't you send me what you have, that spreadsheet, the Excel spreadsheet? Why don't you send that to me, and I'll send it over to JD. Because I don't think I have it anymore. Okay, cool. Mike D says, the market needs a catalyst to move down. I don't see anything but political news to maybe move the market. Yeah, I mean, the only thing that I can see is that the spread between the 10 and the 30-year interest rates are like really, really small. So that yield curve is starting to flatten out. We've got 3.1 on the 10-year and we've got 3.3 on the 30. That's a really, really, yeah, JR, that's exactly right. I think the bond market is actually causing the market to come down. That's absolutely correct. One of the things that I follow, and I mentioned this to you guys before, is the CHI. The CHI is a It's medium grade corporate bonds. And look what happened just over the last month. And then right here we had this huge, this was the first. So this was on Monday. We had this huge move down here. And that indicates a very large increase in risk for medium quality corporate bonds. That is just a gigantic move down here, and so that's something that I watch. I think it's not the fact that interest rates are going up that's the real issue. The real issue is the rate at which they're going up, and that's a little bit on the scary side. Typical move for the CHI is really, really small. This is the daily chart, and you can see what a tight range it's in. Let me just back out here and I'll show you. Look at that. I mean, going back, let's see, what have I got here? See if I can go all the way back. So you can see that's a fairly narrow range. Every once in a while it kind of dips down. But it's been a steady mover higher here since, well, it had a little bit dip down in the flash crash in 2015 and in early 16. Remember, early 16 in January, the market declined pretty heavily. But then ever since then, it's been moving up. But look at this huge gap here. That is unusual for the CHI. Really unusual. Let me see if I can even go back to 2008, 2009. It was down around $5. That's when I got in. And then it's been moving pretty good. There's a, what is this? This is 2014 in October. We had a little bit of a downturn. Here's the downturn in early 2015, 2016. Remember, the market in January of 2016 was a really, really tough market. The market went down, 10-15%, I think. And so it had already started turning down by that point. And now it's starting to turn down again. But this move here, I mean, this is 2010, May of 2010. Remember, we had the flash, that was a flash crash, I think. So I watch the CHI very, very carefully because it is a pretty good indicator of what might happen in the market in the future. Mike asks, hey, I've always been reading that 3% bonds and the 10-year is the magic number. Yeah, I mean, everybody's kind of saying that once we reach 3%, interest rates could really start to move up higher from there, and it's kind of like competing with the stock market because what is the best dividend rate on a Dow stock today? Anybody got that answer off the top of your head? Let's see. Best or dividend rates on Dow stocks. Let's see what we come up with. ExxonMobil is at 3.75%. Is that current, though?
I'm surprised to see GE still there, but that might be historical.
Yeah, that's probably historical because GE is gone now. Yep, Exxon is at 3.81, but everything else is below 3% except for Chevron. So it looks like the oil stocks are above 3%. Everything else is below 3%. Procter & Gamble is 3.46. But everything else is below. So there's a couple Dow stocks right around 350. And so what it's doing is competing. So now with 10-year rates at above 3%, 3.1, if they start inching up to 3.2, 3.3, hey, for a risk-free rate at 3.2%, that's probably going to be much more attractive than, buying a Dow stock with a 2.5%, or even an Exxon Mobil. But look what's happening. I mean, yeah, the oil is going up, but you're talking about taking a risk with a stock at 3.5% compared to a risk-free rate at 3.2%. So a lot of people, it's going to be, I think you're absolutely right, Mike. There's that 3% rate is very attractive on the 10-year. And, the times in which the markets have gone down has been when the bond market rates are competing with stocks. You have to also kind of think that, we've been at all-time highs now, and we've hit a number of all-time highs in the markets on the S&P 500 and the Dow. How much more is there left to the upside on the market? How much? I don't know. But, so that shift, when interest rates start going up, I think there's going to be a little bit of a shift here from stocks to bonds. Also, another piece of news. Dan, you might be interested in this. Does anybody know about the floating rate note? I've never heard of them. I've never heard of it before.
That was new to me as well. Excuse me.
Yeah, according to this, it says in 2013 the U.S. Treasury made amendments to market securities auction rules to accommodate the issuance of a floating rate note. And I had never heard of it until a couple of days ago, actually. I do have a Treasury Direct account. They're really cool. I like Treasury Direct, but if you guys have extra money that you're not investing or you're not putting into the arbitrage strategy, then you might want to consider doing a floating rate note, because what it does is it's indexed to the recent 13-week Treasury bill auction high rate prior to the lockout period, which is the highest accepted discount rate in the Treasury bill auction. But because it's not a fixed rate, it's a floating rate, it is actually a security that has an interest payment that can change over time. As interest rates rise, the security's interest payments will also increase. So you're not stuck into if you want to get a 5-year note or a 10-year note, you're not stuck and locked into that rate. Every 13 weeks, it adjusts so that interest payments will increase as interest rates rise. So I find it pretty fascinating. I mean, if I'm going to park some money, I would put it into a floating rate note. This is not investment advice. This is just, something that I am looking into. But I thought that was pretty good. It's a little bit different than the inflation-protected TIPS. TIPS is pretty good too, but this is much more attractive to me. If I want to park some money, that's where I would go, I think. Hey Dan, how was your camping trip last week?
It was peace and quiet because it was the end of the season, so we had the pick of the litter. They just said, go anywhere you want, spread out. So we had like 2 or 3 campsites that we were able to set up the fire, set up the food. It was good to go. A little bit chilly, but we got furnace and propane, so that lasted.
Nice. Do you guys typically, you do a lot of camping during the summer?
We're doing more and more. We upgraded to a nicer camper this year, so that's when we made about 6 trips this year, and a big one out through the Black Hills and Rushmore and Devil's Tower and Yellowstone National Park. So that was our big trip for the year.
Oh, nice. Really nice. Yeah, I used to love to camp when I was a kid. I haven't, and I took my kids camping a few times, but I was always so busy. I didn't get a chance to take them as much as I wanted to, but we took a lot of trips. I mean, we went to Boston a lot. We went to New York a lot. Went to LA. Took the kids to Washington. Florida. We used to travel quite a bit with the kids when they were younger. I think it's good for kids to be able to travel when they're young like that.
For sure. Take advantage of it.
Yeah. So you guys have any other questions? We're down 245. Wow, we're down 245 on the YM contracts.
Almost 1.5% on the NQ.
Wow. Yeah. Yeah. So just this one contract here is already up about $1,100. The spread is really expanding. This morning it was pretty easy pickings. I decided to stay in a little bit longer this time. I think what I'm going to do with C2 is that because they lag so badly, I may end up just doing swing trades on the YMNQ with them.
Probably not a bad idea. Yeah.
Yeah, their platform is not conducive to quick in and out trading like we've been doing here. So I think I'm going to do swing trades on them. Yep, absolutely. So guys,
Eucharist had a question there. It looks like
oh, okay.
the Excel sheet that you're using for the MTR, do you input the Dow and NDX only at market close?
The Excel sheet they're using for the MTR, do you put the Dow and Index only at market? Yes, I do, but you can actually update it during the day. If you want to kind of get a read for where it is and kind of take a look at the numbers. So, for example, like today, you can actually update it during the day. I'm not sure. I mean, all the information that you have is really at your fingertips with the oscillator. So you want to know exactly what the movement is over the last couple of days. In this new script that JD did, you can actually tell what the cumulative over the last 5-hour period is. It's up 0.315 or 0.289 right now. So it would be the same information, but just in a tabular form. So if we were to update the Dow now, it's at 26,603. And I don't put it in the
Yes,
stats.
those are the only 2 points, Eucharist. We put in the 2 numbers for the pairs.
Exactly.
And everything else updates itself.
Yeah. So you can see that we're starting to fill out pretty well on the trend. We went from a 1 to 5 on the bell curve. So it looks like the positive trend is, yeah, it's definitely continuing and filling out here. And we're at 1.99% now in the 5th column on a daily basis. So anything between 2 and 3%, you're kind of thinking, okay, we're probably getting pretty close to a peak, but you know, we want to see the bell curve start to come down first. We'll see what the bell curve ends today, but we want to see that coming down, especially if we hit over 2% in that 5th. Is there a method for automatically updating? I'm on a Mac, so I can't get the power thing for Mac Excel spreadsheets. I mean, if you can do it on a PC, great. But I don't have any way of automating it with because I'm on a Mac here. JD says you can use the scripts on a daily chart to give exact same info as a spreadsheet. Exactly. So if you take the if you take the charts here and you do the and you install the scripts, you can simply go to a daily chart, and it gives you the exact same info as on the spreadsheet. So example, you can see right now on the 5th column levels, which is exactly this column, we've got 1.99%. It's exactly that. It just changed it. It was 1.99. Now it's at 2%. So if you put it on a daily chart, on a daily time frame, That's exactly the same information that's on the spreadsheet. And that's why it is very cool. Very cool. You can on MS Windows. Yes, you can. You can use the Power Web Query on Windows. You can do that. Yes. I like to see. I prefer the charts, but yeah, you can do it. You can do it on the on a PC. Yes, it is easy. Yep. Wow, we're down 280 on the YM contract. What's the cash index doing? Cash index is down 246. So I think that Jeff says, are you still in the YMNQ trade because you see more potential? Once we get to about, we're at 0.61 right now, difference between the spreads. I think it has potential to go to 1% total on the spread. So I'm just going to hang in there personally just for a little while just to capture. But I think just for today, because what's happening here is the potential for this fifth column to get over 2%. Once it's over 2%, I'm not going to be looking for a long trade anymore. I'll probably start looking for a short trade. And a short trade is selling the YM and buying the NQ. But I don't know, this market really has just been continually going up for the last, since 2009, we haven't really had any bear markets at all. We've had a couple of corrections, but nothing as far as a bear market goes. Nothing major. Dan, what do you think about that?
I think it's going to be interesting with the midterms and see how that affects things and whatnot.
Oh, yeah. Yeah, that's right. Yeah. I guess it depends on how many Democrats versus Republicans are elected in the midterms.
We have to get a strength indicator and supply and demand on that.
Yeah.
Mentioning, I'd stepped away for a minute. I think you were talking about the T-notes earlier. Mm-hmm. That's another thing that I was going to look at spending some more time with, as not to do anything else, but just to keep an eye on it. So it might be a good idea for us to revisit that too. I know you had mentioned that, and I think it was the 2018 group, and doing the Z trades and all those fun ones. I want to go back and refresh those again.
Yeah, those could be really interesting at this point. In September last year, when we finished up it's actually 2000. Yeah, it was like August 2017 when I was finishing up HLM1. I talked about the rise in interest rates, and I was a long-term short. I had a long-term short position on the 10-year, which means if you're short the futures contracts, you think interest rates are going up because bonds will fall when interest rates rise. And so I'm actually still in that position. I keep rolling it over. And that's doing really, really well. But yeah, definitely we should revisit that. Chari says, Dave, do you still look at the DIA and QQQ separation on a regular basis, as you mentioned each one? Yeah, in fact, I've got a chart here where I put the DIA and the QQQs. At least I did have one. Not sure what happened to it. But yeah, I still keep an eye on it. It basically mirrors, though, the YMNQ contracts. If you use the continuous contracts, the YMNQ, it mirrors it almost exactly. By the way, I don't know if you noticed in the update that TOS did over last weekend, they changed the syntax of the symbol window.
I was going to mention that to you as well. I'm like, hey, what's that doing? I got to fix that. I'm like, oh, apparently it's going to stay there now.
Yeah, I know. I said, oh, they messed that up. They messed up the window for our calculations, and I kept putting the NQs with the asterisks 3.64, and it would flip back. So
Yeah.
I don't know. It still works, but the syntax is different. Weird. Not sure why they did that. They also have gone to a 2-digit future symbol. So instead of YMZ8, it's now YMZ18.
Oh, I didn't even notice that.
Yeah. Yeah, they said they did that because with historic data, if you put in a Z8, it could be 2008. So
Nothing like another Y2K bug.
Yeah. So now they're putting in 1/8s on all the contracts, and they automatically updated everybody, so you don't have to really do anything. Pete, remember the notes I sent you on both of the HLMs? Makes it easy to find stuff. Pete, I'm not sure exactly what you mean by that. Char, yes, I was thinking I'm doing the same thing. Yeah, the symbol windows, the syntax is just messed up, but it's basically the same formula. Yeah, sure. Go ahead, Pete.
Hey, how's it going?
Good.
Hey, do you remember I followed all the videos, both HLM1 and HLM2, and made notes on each video.
Oh, that's what you're talking about. Yes, absolutely.
You gotta pass those out because you can search, the documents, and then you got a certain interest, you can quickly find it in what video at what minute in the video.
Okay, cool. Yeah, I will go back and revisit those. Maybe I'll post those up on the website. Thank you very much. Yeah, thanks for the reminder.
Sure.
All right, guys. Anybody else have any other questions? Otherwise, we're going to try to wrap this up. Market looks pretty interesting, down 262. Looks like the selling is going to continue, but who knows? I mean, typically when the market is at all-time highs like this, anything can really happen. I don't see any huge catalyst for a bear market. The trade tariffs, that's kind of a big deal, I guess. That could turn nasty. And now, did you see the business news this morning that China looks like it was putting chips into servers on Amazon and Amazon's and at Apple? Did you see that?
No, I have to check that one out for sure.
Yeah, there was a news story this morning that because they built a lot of the servers for Apple and Amazon, and they had built in some sort of spy chip.
Nice.
Yeah, they make a lot of components for iPhones and stuff like that too. So I'm wondering if they did anything like that. But yeah, it's Amazon. Of course, Amazon and Apple denied it. They said they hadn't found anything, but
Well, of course.
yeah,
They're not gonna admit anything.
of course not. They're not gonna say.
One thing I saw this morning was, which way did it go? It was between Amazon and eBay. One of them was accusing one of stealing or poaching.
Oh, really?
Yeah.
Didn't see that one. Well, Amazon is also in trouble for now putting their products, what they call Amazon Basics. They got all these third-party sellers, right? And let them sell on their website. They let, and so Amazon collects all that data. They find out which products are selling the best, and then they create a knockoff of that, and they call it Amazon Basics. And so in the search results, typically the first search results you get now are Amazon Basic products instead of the third-party seller products. And so everybody's up in arms about that, saying that they're pushing out their third-party sellers. Third-party sellers have been responsible for bringing tons of traffic to the website, building up their business, and now they're shutting them out by creating knockoff products of them. Interesting.
Doesn't surprise me one bit.
Yeah, I knew that when I saw them starting to come out with third-party products, I said, wow, or with their own products. They got to be using that data to find out what's selling, what the margins are. They've got
for sure.
every piece of data that you can imagine. Chari says that they bugged everyone. Yeah, I'm pretty sure the Chinese are bugging the entire country right now.
Right.
Yeah, and Trump isn't really a big fan of Bezos. Yeah, especially that he owns the Washington Post. Hey guys, so we'll wrap up for today. I just wanted to let you know that Dan is available for consulting, private client coaching. So if you're interested, please let me know. I have openings in December, and Dan has one for November, but he has one spot open for November. If anyone is interested, please let us know. You can email me at davidtradingology.com, and we'll get you set up. But thanks again for joining me today. Appreciate it. Keep an eye on the market. It should be really interesting. We'll see if this is just a kind of a one-day kind of sell-off thing, or if this is going to be a little bit more serious here, and we're going to get into a new bear market. But like I said, the only catalyst right now is really the rise in interest rates. And interest rates have been going up fairly steadily. But I'm really concerned about this mid-market, the medium quality that's represented in CHI. If we get a continuation of the sell-off in CHI, then we could see a much more dramatic sell-off in the markets. Euchre says, I'll touch base with the mentorship shortly. Awesome. P says, thanks all. Thanks, many thanks, and keep well. JD said, I'll send you a video link of this morning's trade later. All right. You did a great job yesterday, by the way, JD. Thanks, Dave, Dan. Have a great weekend, Mike says. Charlie says, JD, looking forward to your video. Well, those are for my use only. JD hasn't said that he would share those yet as a private client, but if he's willing to do that, then I'll send them on to you guys. P said we'll send our template later tonight. Awesome. Good. Charlie, thanks, Dave. Greg says, thanks, guys. Have a great day. All right, guys, have a great one. And Dan, if you can stick around a few minutes, I'm going to take a 10-minute break, and then I'll meet you back here in about 10 or 15.
Sounds good.
All right,
Have a
guys.
good weekend, everyone.
All right, cool. Have a great day. Thanks, Greg. You too. Bye. Bye, JR. Hey guys, just a quick update on the volatility spread for today, long YM and short NQ. I mentioned in the trading room that we're going to continue to go higher, and that's what we're doing right now. The spread between the YM and the NQ is over 1%. YM is 1.28% negative, and NQ is minus 2.34%. Once it hits over 3%, I exit the position. So I just wanted to let you know that. That's kind of an important component. Typically, a 1% move in a single day is double the average. The average move between the YM and NQ is 0.5%. And anytime you get over 1% on the spread, then it's time to exit the position. And that's what I'm going to do now. Current profits are approximately $1,600, $1,700, $1,800. So I'm going to be exiting that position now, and I just wanted to let you know that. That's an important rule, that 1% daily rule. Have a good day. Bye.